Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll guide you through my view of the markets for this week. And let's see, we'll kick off. Whoops, there we go. Just reminding you, we are not registered broker-dealers or investment advisors. We're looking at all this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. Again, any personalized recommendations about the markets. We're not subject to trade restrictions, so we can have a position in a security and initiate one at any time. All right, and if you'd like to stay in touch with me, you can go ahead and email me, brandonwendell.cmt@gmail.com. You can also catch me on Twitter at TraderVDub and search for us on YouTube as the Wendell Effect, of course. So for today, our schedule is, as usual, we're going to go into the equity index futures, then the energy futures, and follow it up with a sector analysis and take a look at what's going on there in different sectors. So let's dive right into it, shall we? With the week of October 23rd, which is kicking off now. Basically, on the ES weekly chart, we have a huge divergence. Notice the positive divergence here where we've got a lower low, and we've done a 50% retracement of the 2020-2021 rally. So we've given back half of what we gained on that rally and are giving a little bounce. This does not look like it's going to be a reversal of the trend. If anything, this is just a small bounce. We'll see where we might bounce to, but we are going to retrace a little bit more, possibly up into this area, which is just under 4,000. But otherwise, we're going to continue lower. We're not done with this bear market for at least another 6 to 8 months. So, that being said, you can see if we started pushing back up, we're already hitting this area of supply, which has been tested once, and that's going to give us about a 38% retracement back up. But it looks as though ultimately we'll go back up to this 50%, which is going to be somewhere around 38.43 to 39.36, like I said, just under the 4,000 level. And that's what I see on the daily chart. On the 4-hour chart, again, we closed on Friday pushing up against a supply zone, but testing it for more than the first time. We had kind of a hint that we would possibly push through because when we made this low, we did not go below 40 on that low, and therefore you usually make new highs when that occurs. So that's why we're looking like we're going to break out of this supply, pause possibly at 38.17, but ultimately go to the 39.14 area, which is, again, it's a tested supply, but it was also daily supply and the 50% retracement. Looking at the leadership we had from our highs back in September, the NASDAQ was a leader to the downside. Since we bounced, surprisingly enough, the NASDAQ is also the leader back to the upside. It tends to do that. It likes to take over leadership in whichever way the markets are headed, and therefore we look to that to see where this move up is going to stop and start moving back down again. Well, looking at the NASDAQ on the weekly chart, same picture. We had that big move down and a positive divergence suggesting a bounce, but not a huge bounce because we're starting from below 40, which means we will not take out the prior highs here at 13,000. We'll stall somewhere at about 12,500 at the max on this rally. So we're in a bear market rally. Okay, we have not seen the bottom. I don't think we're near the bottom. We still have a lot of time. As we move back to the upside, there is fresh supply here, 11,541 on the daily, and then ultimately 11,828 to 12,140 will be where we'll stall before we start heading back down. It could be later this week that we get there. We could get a nice rally Sunday, Monday, Tuesday in the futures, and then turn around again Wednesday, Thursday, Friday. It's been kind of the MO for a little while. And on the 4-hour chart, if we do push back up, based on the previous impulse, we again hit our first target already here on Friday, the 0.618 extension, and the next extension is at 11,654, as well as we got a little bit of supply to contend with at about 11,500 right here. That could stall price as we try to rally a little bit. But look for the markets to be a little bit bullish, at least for the start of the week. And we'll see if that is able to continue or if we hit those targets before the end of the week and then turn down. Pretty much same picture on the Dow. You see that positive divergence. We actually hit a projection to the downside before we started to rally there on the weekly chart. And it's a measured move basically, but it was a higher low on the momentum indicator, leading again to the bounce that we're in right now. So we are pushing through this supply that we're currently feeding through, and we should be able to get a bit higher. This has been a much more bullish market and security than the others. The divergence is much greater. You see we made pretty much the same lows in price, but a much higher low on the indicator, which means we didn't have nearly enough bullish or bearish momentum to continue down, and the Dow has been holding strong. It's been much more bullish than the other markets. Don't get me wrong, it's still in a bear market, but not as bearish. So we might actually see a retracement up to 61.8, around 32,000, before we start heading back down again. And on the 4-hour chart, we've got a retest again of a supply zone, but this one should push through. And like I said, test up somewhere near that 32,103 area. Looking at the Russell, we had the positive divergence I mentioned in the other markets. There it is being marked here, and that suggested a bounce. We were also at an area of demand. And as we push back up, we could possibly retest this 2,000 area, and probably should, but not really go much higher than that. We may even stall right here at about 1850 to 1900, as there's a little bit of built up selling pressure that began there as well. So looking at the smaller time frame here on the daily, you see we made that positive divergence again, did make a higher high, and are trying to push up back into about a 50% retracement. 1840 is my target right now, where we would likely see the bullish pressure subside and start to push back down once again. 4-hour chart's not really giving us much different of a picture. We do have overhead supply way up at 1830 to 1861. And that was pretty much, near the top. It was same range as right here. So that's really the highest probability. And that 50% retracement was about 1840. So look for that to possibly cap off our move up and then start the drop on the equity markets. So we're going to move from the equity markets into the energy markets. Oh wait, I forgot to mention before I get out of this, I talked about the range that we've been in. And when you fail to touch the bottom of the range, that's bullish. So this is telling us on the 4-hour time frame that we will break to the upside early in the week. So as I was saying, let's move on to the energy markets now and take a look at what's going on there. On the crude oil chart, had a nice bounce to the upside. It looks like we might be regaining or resuming our bullish trend. We had a nice retracement down in this weekly demand. We overshot it a little bit, but it looks as though we're trying to push higher. So last week we had a little bit of indecision after we dropped, and that means basically if we break the high of last week, we should probably take out new highs this week. And looking at what's going on the daily chart, we had an impulse up. We've retraced 61.8% of it, also right into a little bit of the origin of this buying pressure, and that's what caused us to push back up. It looks as though when we made that low, we didn't have enough bearish momentum to stay down and are going to be able to break out. I wouldn't be surprised to see us break out towards this 95 level this week. I don't know if we'll have enough momentum to get to 102 right away, but this week we'll probably get closer to maybe about 90, 91 by the end of the week. And look at the 4-hour chart. We do have a little bit of overhead supply here at 88 we have to contend with first. You see we did that nice bounce off demand that was formed right here in the 4-hour. And you can also see we couldn't get below 40. So instead of retracing down more, because we did a 61.8% retracement of our previous impulse, it looks like we're getting ready for new impulses up, but stalling points and profit taking might take place at 88 and 89.60. On the NASDAQ, not NASDAQ, that should, I know why it says NQ. Excuse me, it should be NG. Apologize for that, it should be NG. Nat Gas, that's what this is a weekly chart of. Okay, so as I said, we got this nice move to the downside going on here. Looks like we could break through that demand on the weekly. It looks like it wants to keep going down as we have a lot of momentum pointing that way. Also, on the smaller time frame, the daily chart, it looks like our next target is our demand here, 4.3 basically, and that's the next Fibonacci extension as well. So look forward to continued selling on Nat Gas to cause us to push back down towards that target. 4-hour chart, really not much else to say. Look for shorting opportunities. If we rally, I didn't mark this, but this looks like a nice little supply here. Should probably put that one on. And honestly, we're going to have a rollover. I did use November, but we are going to be rolling over pretty quickly here. So we'll go to a 4-hour chart. And this is a November chart, but again, like I said, we're going to get that rollover, so I'll give you the correct times for that, or numbers. And let's see. That's 5.306 to 5.532. If I go to the December contract, numbers will be slightly different. There we are. And we're looking at 5.777 to 5.972. And if it does go a little higher, that's not a great zone. This is probably the better one right here. And we have 6.175 to 6.292 on the upside. But you can see how sold off we are, how strong the downtrend is, and it doesn't look like we're going to get it back up there anytime soon. But we could get a little bounce before we go lower, If you sell short at that 5.777, look to target about 4.486, probably about 4.6 to be honest with you, because that'll adjust too. On the weekly chart of gasoline, we had a little bit of a bottoming here and it started pushing back up over the past couple weeks. That candle we just finished last week is a bullish candle. It's kind of like a hammer type candle, really more of a dragonfly doji, if you will. And that's a bullish sign if we break the high. So if we do, then our ultimate target will eventually be back up here to 3.2, 3.3 area. Well, on the daily chart, you can see just kind of sideways, a little bit down. That's a corrective mode where we had an impulse up. Not sure if we'll retest this area of demand at 2.45, but if we do, that'd be a nice buy to target 2.92. That's the next level of supply that I see here. And it's not really much in between. This has already been tested. So it does look like we're in a correction. It should break out to the upside this week. And I would say 2.92 is the overhead target. Not sure if we'll get there this week, but it's going to try. And on the 4-hour chart, you can see when we impulse up, we retrace 61.8%. And it does look, again, like we're going to try to go higher as we got a little bit more momentum left to the upside. Although we did go down below 40 on this pullback, so that's why we couldn't make a new high right away. You see that? That's usually what happens. If you have too much bearish momentum, when you rally, you can't make new highs. So if we put in a pullback and a bottom where we're not below 40, then look for the breakout. That'll be your cue right there. And heating oil on the weekly chart made some highs and pulled back a little bit. So we got some indecision here. We closed a little lower this week. And basically, you got a little divergence. Let me see if I can move. Oops, can't change that. You got a higher high in price, but a same or lower high on the indicator. That's a divergence, which led a little bit to the pullback. We might not be done pulling back. You know, we did do a 38% retracement. If that's all we get and we push higher on the daily chart, we break that high, we should rebound and bounce to 4.3. If we don't, if we break below 3.66, then expect a move down to 333, which is our next area of demand, and we should bounce from there, as long as we stay above 40 on the daily RSI. So keep an eye out for that. If we're below 40, as we come down to that demand, the demand will not stand, will break down. Also, on the 4-hour chart, well, we got a positive divergence. That gave us that little push to the upside at the end of the day on Friday. All right, so it looks as though we got that little push to the upside. We didn't really get a lot of bullish momentum out of this, so there may be some move to the downside first before we can rally. And 3.53 would be the next area of demand if we pull back further than we are already. Again, watch to see if we break that daily high, then we just go up. If not, we test the lower demand zones I mentioned on the daily first before we go higher. Now we're going to jump into the stock market. We already saw a kind of overview with the futures, but looking at the individual sectors, well, for the past 6 months, really, we've been seeing that energy is still pushing higher as inflation is in the forefront of everybody's mind. We're still seeing outperformance in the safety valves of healthcare, staples, and utilities compared to some of the other markets, although they're not necessarily leading us as they would in a strong bear market. It's kind of weird. Looking at last week, as a matter of fact, those were most out of favor. We had the biggest gains, of course, in energy still, but we also saw materials and technology doing really, really well. So if we continue with the bear market rally, you'll probably see those two sectors, technology and energy, doing really well again. Looking at the map of the market, this was for the past week, I believe, or is it the past month? Ah, there we go, past month's performance right there. And you can see there's that energy in green and not much else. I mean, we had a little bit of movement in industrials and healthcare as well. Anyway, the past week was very bullish, so that's what keeps jumping there. There you go. You can see that that's where we had all the movement. So looking at the individual sectors, XLY, which is discretionary, is really just kind of choppy sideways. We lost some of the bearish momentum, but we still went below 40, so we're not ready to make new highs yet. So I would not be surprised to see us fall down below 145 and pull back a little bit this week. Again, it doesn't look very strong, so I wouldn't really look into this sector as an opportunity. Look elsewhere. You got stronger markets. Also, whoops, there we go. On Booking.com or BKNG, Booking Holdings, I warned last week to take profits. Remember, we were in this trade for a nice short, and I forgot exactly where it was. But anyway, I said that, we had a positive divergence here, and we were going to go ahead and rally a bit. And sure enough, this is exactly what happened. So if you hadn't been in yet, this should not have been in yet. I take that back. It looks like we're looking for the entry at this point. So we're looking to get short, and it looks like we might actually get our opportunity to get short pretty quick. Do not sell short, though, if we touch the supply zone with the RSI above 60. And be careful, we have earnings coming out very soon, too. That could throw things off. But if we hit supply and we're below 60 on the RSI, then that'll be a good short entry. Now, target 1's already been taken out, so we can possibly just run to target 2, which actually happens to be 1481. Okay. Moving along, the XLC Communications, that actually looks like it's poised for a small rally. We had a bottom put in here, and that divergence is in, so I would not be surprised that we get a rally out of XLC, but we're going to run into overhead supply here right around 52 and watch that sector as it rolls back over. So there might be a little bit of bullish opportunity in the sector for communications, but don't expect a whole lot out of it. Maybe get out by Wednesday, Thursday at the latest before it turns down. So this is what I was looking at. Let's see. Oh, that was a trade we had looked at as well, I think, on the XLC, looking for a short at that 51.57 if it comes up there. And that would be the possible happening this week. You can see we pushed up towards that area, and we haven't quite gotten there yet. So technology, XLK, this has been the strong sector, but you got to wonder if it's going to be able to close the gap and continue to go higher, if it's going to close the gap and drop. Technically, you got rally, base, and drop with the gap right there. So watch for that 125.80 to 127.91 as possible turning point for prices to go back down. The market continues to be a bit more bullish. Maybe we rise to this 134 area. But again, right there, we probably run into some stumbling. I just don't see us getting much above that 125. We came up from below 40 originally, so it looks like we should stall out there, though. IBM, this was a trade opportunity we had put in, and we had hit our entry a couple weeks ago. It was doing pretty well in the trade. And let's see, unfortunately what happened was we ended up gapping back up into the zone, and we were above 60. When you're above 60, supply is a lie. And actually, I think it was that way on the entry right there, too. We were above 60, so I was saying, don't enter, because when you're above 60, you're not going to get the moves you want. Sure enough, it didn't. It came back up and broke through the zone. So that's why I use that RSI as a kind of filter to get me into good trades and keep me out of bad trades. The industrials, XLI, is on a bit of a retracement as well. Now, recently on a low right here, it looks as though we stayed above 40, so we might actually push a bunch higher. It's not really a good supply zone, but we have lots of selling pressure. Begins at the 50% retracement at 91.91. So this week I expect us to rally up towards that area, and also to the gap closure possibly right here about 96 if it gets really bullish. I don't know if we'll make it to 96 this week. We'll probably make it to 92 though pretty easily. On the builders, we're actually testing the demand or supply zone, for the second or third time, and we're going to get through this time. It looks as though price could retrace almost 100%. There's really nothing to hold us down on the material. That's XLB. It's a material sector. So this may be a good sector to look at once we get above the 73% or 73.01. That's 50% retracement of the previous move down. So once we do that, we're likely to scale, just keep going up for a little bit here. As far as the energy sector, this has been all over the place. We had a negative divergence. It was only a small pause. You can see we couldn't make new lows on the indicator, couldn't make new lows in price, and are rallying up to new highs. So sky's the limit. It looks as though we're going to continue to push up. I think 93.17 is not out of range anymore because we have that nice impulse correction. We're impulsing again. If we just duplicate the previous impulse, albeit not as fast, but we should be able to reach that 93. So keep an eye on the energy sector. It's still running hot, and it looks like it's going to continue. The consumer staples, however, is a little bit underwhelming. You see we're going a little sideways. We did try to push down. Couldn't get below 40, so there may be a small rally here, but it's a little more muted than we saw in other sectors. The energy looked a lot stronger. Here we might stall out right around this 61.8% at 71.35, and we even have a little stumbling here at 70.38, the 50% retracement. But it does look like we should be a bit more bullish this week in staples. XLV, the healthcare, that's healthcare, also put in a bottom and could not stay below 40 twice. So we should make a new high. This is a supply zone. It's already been tested. Looks like we should push up towards the 132.37. So a little bit more bullish in that. A couple of the sectors out there, energy and again the safety sectors of staples and healthcare. Utilities doesn't look like much. It came down to a weekly demand zone, but instead of bouncing, we kind of went sideways. We only had a small retracement, even though we're getting a little bit more bullish momentum. It looks as though this is kind of a dead sector. Most likely need to avoid it. It looks like we're going sideways. Financials, on the financial sector, same kind of thing we just saw on some of the other sectors. We're retesting this area, although this is actually the first test. This would be the second test of that supply. Originally looking to go short there, but it kind of came close and wiped out all the orders. Now you definitely don't want to get in anymore because it looks like it's going to try to make higher lows and higher highs. So keep an eye out. This looks like it's going to go higher, not lower, on the financials this week. Real estate, not really much going on there either. We had a nice retracement back, about 61.8% of our previous move, but then came back down, went below 40. I think we're just going sideways. I would look to other sectors for an opportunity here. Well was one of the trade opportunities we were looking at, and originally I was looking at a short here, 63.40, and I don't think we hit that entry yet. You can see we pulled back, couldn't quite get to the entry spot. Unfortunately, this may be our lower high before the lower low. So we do have earnings coming up pretty soon. If we can't get in before that, I'm not going to take the trade. Microsoft was another opportunity we were looking at. Unfortunately, missed the entry, but hit our first target. And I think that's the follow through already. So unfortunately, we kind of missed out on the trade because it looks like it's going to go higher without us. And Electronic Arts had an entry finally, came pulling back up into supply. The RSI is still pointing a bit high. Even though we're not above 60, that's pointing upwards. We could get above 60. So you really want to be careful if you did go short. Make sure the stops are tight. Anyway, that's what I got for you guys this week. If you're interested, you can possibly still join me. I think there's still some room available. I'm going to be live in Long Island this week on Thursday. And basically what I'm doing is a day in the life of an online trader. I'm going to be pulling out all the stops, sharing a lot of information with you, things that I use in my own personal trading, and we're gonna have a lot of fun. So make sure you can hit me up, send me a message if you're interested in going, and this is the actual order form for it as well. And if you want to pause the video, go ahead and write that down. If not, I'll continue to see you here. And if you enjoyed what you've been hearing, please hit like. Also, stay in touch with me, as I said before. And you can also feel free to subscribe. Let me know you like this show. I will talk to you again next week. Until then, trade safe, trade well, and take care, everyone.